All right, welcome back to the Know Your Numbers REI podcast. This is your host, Chris McCormack, and I'm excited to bring you another week of tax insights that will help you confidently scale your real estate portfolio regardless of market conditions. We know that when you get the tax piece of the puzzle right, your ROI skyrockets. Taxes are the biggest cost of our lifetime, and real estate and entrepreneurship are two very proven ways to pay less in tax and scale your business and your real estate confidently. And so today we're going to be talking about one of the great strategies that we can use to scale your business confidently and increase that ROI by keeping those taxes low. And that is the topic of real estate professional status. We know that there are a lot of people out there that are very knowledgeable about real estate professional. We know that the amount of information out there is increasing, and I am all for it. I think it's a great idea, and I think it's great when clients come to us or prospective clients come to us and they know a lot about the tax code. It's one of the most fun relationships that I get to be a part of in this business world and this business environment is a client who is equipped with a strong sense of the tax code, because it makes it so we can pass ideas back and forth. And based on my knowledge and experience as a CPA and running through the court cases and reading the tax law on a regular basis, we are able to come up with ideas. And some of those ideas I have to shoot down, and some of those ideas I can say, let's do it and let's run with it. And some of those ideas come from us directly. Some come from just conversations, because we know that you, the investor, you guys have a first-hand view, first-hand experience of what's going on in your business. And so something might come to mind as you're fixing up a property, or as you're driving to Home Depot, or as you're on the phone with your property manager or your investors, and you bring that to the conversation, and we're able to create a plan around it. So that's half the fun. And we know that this topic, real estate professional, is a topic that a lot of people have knowledge about, but the problem is that knowledge does not equate to wisdom, right? There can be a large amount of knowledge, but if you don't have the wisdom to apply it, wisdom is knowledge applied. If you don't have the wisdom to act it out and to gain the advantage that is available to you, then it's good as nothing, right? We see this today. We see this in our world, right? There is no shortage of information out there. Everybody's knowledgeable about the latest headlines, or what happened in the game last night, or who won the last major golf tournament, right? We can have knowledge, but our knowledge is only as good as we're willing to make it, right? I can know who won the US Open golf tournament, but if I wasn't watching, or I don't know what happened in the performance, that can lead to a faulty conclusion, right? US Open golf was recently. We had Bryson DeChambeau win the tournament. He beat Rory McIlroy by 1 stroke. That alone gives me enough information to know who won and who came in second. But if I didn't watch it or I didn't read into it, I wouldn't know that Rory McIlroy had a 2-stroke lead and that he missed 2 very easy putts and was arguably more deserving of the tournament win throughout a lot of the play of it. And it could lead me to draw a faulty conclusion about Bryson DeChambeau being dominating at the US Open and playing almost flawless golf, which was not true, right? He missed, I don't know how many of you watched it, but that would be a flawed conclusion. And so just as our knowledge of the winner of the US Open, or even some political topic, we can know that abortion is a hot topic in this year's presidential election. But if we don't do the research to understand why some people are so turned off by it, because they think that a baby in the womb is a real life and should have a right to life, well, we can draw a flawed conclusion about who those people are or what their beliefs are, or they just want to be these strict religious folks who want nobody to have fun in life. And that would be a flawed conclusion. And the tax code, it's a crazy analogy, but it's true. The tax code is the same way. You can understand that real estate professional status will give you the ability to write off losses related to your real estate and use that against your active income. But without the insights to take you deeper into what's required of real estate professional status, or who's eligible and who's not eligible, you could draw a flawed conclusion about your ability to write off losses as it relates to real estate. And we want to avoid that at all costs. And that is the goal of this podcast. So if you have ever felt curious about your real estate professional status and whether you qualify for real estate professional, or you're worried that you got into real estate and thought you could qualify for real estate professional status, and now you're worried that you don't qualify, or you're concerned that your CPA that you trust and rely on to give you the information you need is turning down the possibility that you could be a real estate professional, this podcast is for you. So follow along as we talk about what real estate professional is, what it allows you to do, and what's required for you to meet those qualifications. So real estate professional status gives you the opportunity to take traditionally passive losses and make it active, and use losses generated by your real estate activities against any active income you may have. So a little history lesson for you guys. 1980s rolled around. There were a lot of people getting into real estate. A lot of them were making a lot of money. Think doctors, lawyers, maybe even accountants, people that were making a substantial amount of money in their W-2 professions, and they were paying a lot in taxes as a result. And so they were looking for ways to offset those taxes. And they heard about this great thing of real estate that allows you to take depreciation deductions, and you have an asset that's appreciating, but the IRS says that you can depreciate it and get an expense that you don't really pay for every year. And it usually results in you showing a loss on that rental activity. And so these doctors and lawyers and high income earners were using real estate to offset their W-2 income, their active income, and pay $0 in tax as a result, because there was no passive loss rules. And that quickly changed. In the 1980s, there was a big tax overhaul, and Congress basically said, okay, we're not going to allow this anymore. Doctors, lawyers, you guys are making a lot of money. We need your tax revenue. So real estate is officially a completely passive investment. If you buy and hold real estate for the long term and hold it for more than a year, and you're generating cash flow and writing off expenses, that's passive income or loss, and taxed as such. You can't use your losses to offset your ordinary income. So there was a restriction on what could happen through the power of real estate. But there was a loophole, if you will. And loophole's a weird term because it usually just saying that this is allowed under certain circumstances because the tax code allows it. So it's not really a loophole, if you will, but we'll call it that. And so the real estate professional status is a loophole that allows people who qualify for real estate professional to use their income generated from rental real estate or losses generated from rental real estate and classify it as active income or loss. So if I qualify for real estate professional status, I make $200,000 in my W-2 or in my business income, but somehow I'm able to generate a $50,000 loss on my rental portfolio. I can use that to offset my active income of $200,000, and now my taxable income is $150,000. So there is a great benefit to this real estate professional status, because what was used to be allowed for everybody is no longer allowed, but real estate professional allows it to come back into play by qualifying for this status. So if you are a real estate professional and you have rental properties, it's a great opportunity for you. And now you're probably asking, okay, I get that, but what does it take to be a real estate professional? Because I can't get a sure answer, or everything I read online is confusing, and I'm spending so much time trying to find out if I'm a real estate professional that is not letting me do any real estate related activities. And I say, fear not. Here is your answer. So as a real estate professional, you have to perform more than 750 hours of service in real property trades or businesses. And you're like, I thought you were going to give me my answer, Chris. I'm more confused than I was to start. And I say again, fear not. We will expand that definition, because yes, we know that 750 hours of service in real property trade or business can be confusing. It doesn't really go into detail, as is the case with a lot of the Internal Revenue Code. But they take us further and they say real property trade or business is development, redevelopment, construction, reconstruction, acquisition, rental, operation, management, leasing, or brokerage of any trade or business related to real properties. So there's 10 activities that you can use to qualify for those 750 hours of service. And you're like, all right, awesome. I manage properties. I spend more than 750 hours in the business. I think I'm all set. I'm good. And to that, I would say, hold on, we have to meet another requirement. And that requirement is that it's got to be more than 50% of your time in any other property, trade, or business. So for you W-2 earners looking to qualify as a real estate professional, I have a sad truth, but sometimes the people who tell the truth have to go against the untruth that you might be believing, and it's the most loving thing that they can do. If you have a W-2 job and you are by yourself and nobody else is involved, chances of you qualifying for real estate professional status are slim to none, because you have to work more than 50% of your time in that trade or business. And if you're at a W-2 and you're working 40 to 50 hour weeks, and we know that working 80-hour weeks on anything is a lot of time. Well, if you're working 40 to 50 hour weeks in W-2 job, and that leaves 30 hours to stretch yourself as thin as possible, but work in real estate, that's not going to fly. And I have not seen a court case or any evidence of the IRS accepting W-2 wage earners as real estate professional. I had somebody come a few years ago now and show me everything he had, and he was confident that he could make it work. And I was like, hey, I hate to be the bearer of bad news, but this ain't going to fly. That's not to say that there's no way around it. I'll get into some of those ways in a second here. But if you have a W-2 and that you're relying on to get real estate professional status, chances are you will not qualify. So those are two things. Now, for real estate professional status, you also have to materially participate in each rental activity. And you're like, okay, what the heck is material participation? Great question. They give us 7 requirements. You have to meet one of them. You have to meet one. Many people meet multiple. Some people meet none. So this, again, is a big factor in whether real estate professional status is acceptable. One is you work more than 500 hours. Okay. So if you work 750 hours, 750 is more than 500 hours. So we meet it. All right. Awesome. We qualify for real estate professional, assuming it's more than any other activity that you participate in. More than 500 hours. Do substantially all the work. Work more than 100 hours and no one else works more. Significant participation activity. What's that mean? More than 500 hours. Materially participate 5 of the prior 10 years. Materially participate for any of the 3 prior years. Or taxpayer participates in a regular, continuous, substantial basis. You can see that there's a lot of gray area for some of these, mainly the last 3, or it just feels like it's going in a circle. What is material participation? It's material participation for each last 3 years. So it can be confusing, but the goal or the rule of thumb that you can use is that 500 hours, right? Because the substantial taxpayer participates a regular, continuous, substantial basis. The way they're going to determine that is how many hours you work. So 500 hours is a good way to determine whether you meet the material participation rule for real estate professional status. Again, you can't just meet that 500 hours. For real estate professional status specifically, you have to meet that 750 hours. So you ask, like, what is the point of the material participation status or material participation test if we have to meet 750 hours anyways? That's to go across any type of industry, right? Real estate professional status is specific to real estate activities. Material participation can be spread across any other industry, because if you work less than 500 hours in, say, your bookkeeping business, well, that could potentially be a passive activity, which you can use passive losses to offset the passive income from a passive activity. So material participation is not just for rental activities. Real estate professional status is just for rental activities, and we have to meet the 750 hours requirement. It's got to be more than any other activity. You might have heard me say each rental activities. If you have 5 rental properties, you're not working 750 hours in each of those properties. And so real estate professional status is technically on a per property basis. That means if you have a rental activity that you spend more than 750 hours in on this one property, which I know many of you do, there's those problem properties that you're always visiting and always looking at and dealing with tenants and move-ins and move-outs. You work more than 750 hours on that one property, and that property, through the power of depreciation, cost segregation, all the other deductions that you might have, generates a loss of $10,000. You can use that $10,000 against your active income. But if your second property, you only work 100 hours in and you have a paper loss of $15,000, technically you can't use any of that against your active income, because you have to materially participate in each rental activity. So what do we do in that case? Are we out of luck? That would scare me. I have a loss on a property that I don't really work on, but I work more than 750 hours in my rental activities as a whole. What am I supposed to do, Chris? Great question. What we do in that case is what's known as a grouping activity. We group all of the activities together, and as a whole, we get the real estate professional status, and then we can deduct all of the losses combined against the active income that you might have. This is the solution. And so how does this play out in real life? Well, we had a husband and wife client. Husband works, wife stays home, but also does a bulk of the work in the real estate activities. She's managing bookings. It's a short-term rental. She's managing tenants. She's doing bill pay and working as a property manager in that respect. And so she qualifies for real estate professional. They have 5 properties, I think 5 at this point, short-term rental properties. She works more than 750 hours in the real estate trade or business, and it's more than any other activity, even though she has a business on the side that she makes some money from, but doesn't work as much as she does in the real estate activity. She also materially participates under the works more than 100 hours and no one else works more requirement. So she has material participation and she now has real estate professional status. We are able to cost segregate their properties. We've done this twice now. We got a $30,000 refund in 2022, and we're going to be getting a $10,000 refund in 2023. That's $40,000 worth of tax refunds that we're able to get our clients through this tax strategy. Her husband works. That is unheard of in most places. But because she hired us, because we worked with her, because we know what's going on in their life, we were able to do it, and they're more confident than ever. They're looking to secure their dream property in Myrtle Beach, South Carolina here in the coming year. So it is possible. It happens more than you know, but the amount of people that are declined or lose an audit or don't have enough evidence to back it up, they fall short. And these are the things that you need to be aware of before taking the leap and saying, I'm a real estate professional. I'm going to go get a cost segregation, write off all my real estate losses and all that good stuff. So be sure to reach out to a qualified real estate tax professional. If you're looking for a qualified real estate tax professional, maybe you're confused about whether you qualify for real estate professional status, or you're concerned that your current CPA is not giving you the benefit of the doubt or has written you off completely, or you just want to see if it's even possible that you can qualify under these guidelines, we'd be happy to hear from you. We'd be happy to get in touch with you, offer you a free consult where we'll do a deep dive into your information and see if we're a good fit. You can follow the Calendly link in the description to get that free offer and the opportunity to meet with myself and our team here and see what we can do to help you pay less in tax. If you got any sort of value, go ahead and share this with a friend. Subscribe to never miss an episode. And until next time, God bless you and keep moving forward.